Let's look at the audit procedures in assessing whether an entity is a going concern. Like, what is the auditor supposed to do to confirm that an entity has a future in operation or not? First, the auditor is supposed to confirm that the going concern assessment period covers at least 12 months from the reporting date. Like, the auditor is supposed to confirm that they considered at least 12 months when assessing the going concern of the entity. Then the auditor is also supposed to analyze and discuss the entity's cash flow, the profit, and then other relevant forecasts with management. The auditor is supposed to look at the cash flow, whereby there is inflow and outflow, the profits that they're making, and anything else that is relevant with management. In case there is anything negative, is supposed to discuss and find out why and whether they have a solution to that problem. Then another procedure is that the auditor is supposed to review the entity's latest interim financial statements. Interim financial statements are those financial statements but are they are not for a full year, they can be like for 6 months. So the auditor is supposed to review the entity's latest interim financial statements to assess if they're in line with the cash flow forecasts. Then another one, the auditor is supposed to review any loan agreements to determine whether the terms have been breached. The auditor is also supposed to read minutes of meetings after the year end, revealing other issues that indicate any financial difficulties. The auditor is supposed to inquire from the entity's lawyers regarding any court cases and claims and see whether there is any court case that can affect the going concern of the entity. Then another one, the auditor is supposed to confirm the adequacy of the sources of finances, e.g. the loans, the disposal of assets, and then related parties. It's supposed to confirm whether the entity has enough sources of finance. Then the auditor is also supposed to evaluate the entity's position regarding unfulfilled customer orders. Like, supposed to find out like how many customer orders are not yet fulfilled. In case there are many, it may be a problem. In case there are few, it means that they're good to go. Then another one, the auditor is supposed to review subsequent events to assess whether they indicate or mitigate going concern. The auditor is also supposed to review reports of regulatory authorities like URA, UNBS, NEMA, to see if the entity is not having any problems with any regulatory body. And in case they are having, the auditor is supposed to find out why and find out whether it affects the going concern of the entity. Then lastly, the auditor is supposed to obtain written representations from directors, like something written that shows that they believe that the entity is a going concern. It must be showing reasons as to why they believe that their entity is a going concern or it has a future in its operations. So that is all about going concern concept. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.